Good morning and welcome to Stock Market Today. It's Monday, December 23rd, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. A lot of the content for the show comes out of that email. It also gives you daily stock ideas to consider. It's your inbox every trading day before the market opens. And just a programming note, there will not be a show tomorrow or Wednesday, Christmas Eve and Christmas Day, respectively. But let's dig into it. U.S. equities were higher in quiet Friday's trading, and the S&P 500 posted a fourth straight week of gains. All sectors were higher on the day. Energy, utilities, and healthcare were the best performing groups, while financials and consumer discretionary lagged the broader tape. Treasuries were mostly weaker, with the curve flattening. The dollar was stronger on the euro and yen crosses. Gold was down 20 basis points. WTI crude settled down 1.2%. So your outperformers, energy, utilities, healthcare, add staples to the mix. Underperformers, fins, discretionary, comm services, and materials. As we get to the desk this morning, futures are up about 10 basis points to start the holiday week. Asian equities were mostly lower overnight, with China underperforming. European markets are little changed. Treasuries are unchanged. The dollar is weaker versus the yen and the euro. Gold is down 10 basis points, and WTI crude is off about 30 basis points to get us going on a Monday morning. So let's take a look at the structure of the S&P 500. Another record close as the index again closed near the high of the day. Near-term support is in the 3,100 to 3,150 range. We're waiting for a resistance level to form. With the market trading at all-time highs, there by definition is no price-based resistance. The RSI remains overbought, entered that overbought condition again with Thursday's close, and remained there yesterday with the move higher in equities. Chaikin money flow, however, does remain bullish. So the indicators point to a confirmation of the price strength that we've seen here on the index, really since breaking out of this July through October consolidation, setting up a series of new highs as we've gone along into the end of the year. That trend remains in place. That trend is confirmed by momentum. The S&P 500 is trading above a rising 200-day moving average, which is now down here at the 2955 area. So heading into the holiday shortened week where liquidity could be light, the trends that we've been discussing remain in place. So the song kind of remains the same. Focus on leading stocks and leading areas of the market. Look for those stocks when they are oversold with bullish money flow. Keep in mind that liquidity is going to be light, or is likely to be light, over the next 2 weeks of trading. Let's turn to our market in a minute. What am I writing about in my note today to Chaikin Analytics clients? Well, stocks cap a strong week by trading at record highs. Small caps begin to outperform the S&P 500, and that definitely is a character change versus what we've seen throughout 2019. The 10-year yield moves closer to resistance near 2%. Commodities break out with a momentum confirmation, and futures do point, as we said, to a higher open here today. From a power bar perspective for the major averages, all pretty much skewed, the ones that we look at, all pretty much skewed in favor of the bulls. The Dow added 30 basis points on Friday. 6 bullish stocks there for 2 bearish stocks. The S&P 500 up nearly 50 basis points, 130 bulls to 65 bears there. So 2-to-1 ratio. Better than 2-to-1 bull to bear ratio for the NASDAQ, which added nearly 40 basis points on Friday, 26-to-12 bulls to bears. Better than 3-to-1 on the small cap. Small cap slight underperformer on Friday, 757 bulls, 235 bears after the small caps added 10 basis points on the day. Bonds upticked, sending yields slightly lower according to the Chaikin Power Bar. Small cap stocks and large cap stocks are bullish. Let's look at our stock of the day now. Remember, the stock of the day is auto-generated based on the Chaikin Power Gauge rating, and we look at it and analyze it for you here on this show in real time. Our stock of the day today, TCF Financial Corp, ticker symbol TCF, closed at 46.74, up 73 basis points on Friday. So some nice outperformance there on the day. The Chaikin Power Gauge rating for TCF is very bullish due to very strong earnings performance and very strong price volume activity. Financials and experts are middle of the road, but when we take the 20 factors, 5 in each of these 4 categories, we come out with that very bullish rating. We have a strong trend with the stock above the rising long-term trend line. We have a strong industry group. You've heard us talk about the banks for the past couple of months, breaking out really as yields bottomed back in the September October timeframe, financials started to get in gear and begin to outperform, led by the banks, and TCF is one of those names that we want to be focused on, we think. Taking a look at the chart from the bottom up, the ribbon at the bottom of the screen tells us where the rating is and has been over the past year, and you can see it's been dicey, but shifting between neutral and bullish, but now persistently bullish since mid-October, and shortly thereafter in early November, stock begins to outperform the market, and the intensity of that outperformance has been increasing of late. So the market and model are in agreement. We have a very bullish stock that is now outperforming the market. This is the type of name that we want to consider owning. Looking at it from a timing standpoint, however, while Chaikin money flow is bullish, and actually money flow readings near the highs that they've been for the past 12 months, the stock is currently overbought in the near term based on our overbought, oversold indicator, right? The ideal setup would be to buy a stock that's oversold within an uptrend. Right now, TCF is overbought within its uptrend. I think what the best course of action here is to add TCF to a bullish watch list, give that overbought, oversold indicator some time to work back towards an oversold condition, and all else being equal, meaning it's still bullish or very bullish, it's still outperforming with bullish money flow, then it sets up a more compelling entry point in our opinion. Take a look at TCF, add it to a bullish watch list here today. I think you might get an opportunity with a better setup on entry. Let's look at the sector tracker now. Moving to the major sectors over the last 5 days, the last week of trading. Comms at the top of the list, up 2.6% over the past 5 days. Utilities have actually had a nice week of trading, up nearly 2%. Healthcare is emerging leadership in an area of the market where we've been increasingly focused. We are paying attention to the rally in energy. Well, the fundamentals not fully there yet. We're starting to see some improvement in the energy complex. We think it makes sense to pay attention there. Real estate higher by 1.75%. Looks like a counter trend rally. Middle of the road is tech, discretionary, and materials. Towards the bottom of the list, staples, financials, and industrials, with the financials and industrials actually trading lower over the past 5 days. It's something we want to keep an eye on, especially we'll be focusing on rates. We'll take a look at the 10-year yield a little bit later in this show, but rates and their path obviously have an impact on different areas of the market, and we're going to continue to watch that very, very closely. Our industry in focus today is one near and dear to our hearts. We've been talking about it a lot, semiconductor services. Over the past 6 months, semiconductors have outperformed the S&P 500 by over 16%. And the power bar ratio, which measures future potential, is strong, with 10 bullish or very bullish stocks for 8 bearish or very bearish stocks. It's currently ranked number 14 of 21 subsectors. But for us, it's really that relative strength that drives our view on the market, or is one of the key drivers on our view on the market. Some of the indicative stocks in this group: Intel, INTC, very bullish rating; Qorvo, QRVO, very bullish rating; and Micron, which reported last week, also with a very bullish Chaikin power gauge rating. What I will say for all three of these stocks is that they are all overbought based on that overbought, oversold indicator. So overbought stocks within the context of existing uptrends. And that pretty much remains the case for the ETF itself. Looking at the XSD, the SPDR S&P Semiconductor ETF, we can see that the fund has a bullish ETF power gauge rating and is in a strong trend above this rising long-term trend line. At the same time, the market and model are in agreement. So similar to what we do with stocks, we can do at the ETF level. Bullish power gauge rating, bullish ETF power gauge rating, and a stock that is outperforming the market. Chaikin money flow is intensely bullish. However, the fund here in the near term is overbought. So just something to keep in mind as you're looking for your ideas. We continue to like semiconductors, but acknowledge that a lot of the leading names are overbought with the fund. Let's look at what's trending now. Friday's movers and shakers, our gainers and losers. CCL up 7.6% following their earnings announcement. Mosaic said that they were going to reduce fertilizer production. Stock goes up 5.4%. Newell, no real news to send that stock higher, 4.8% on the day. ConAgra, CAG, some follow through following their earnings announcement, adding on another 4% on the day on Friday. And IQV, I didn't see any real company specific news there to send that stock higher by 4%. On the loser side of the board, KMX, their earnings missed. Investors took 6% out of the stock. ABMD, Abiomed, it's been a volatile name of late, following through to some previous weakness, down 3.86%. F5 made an acquisition. Investors took 3.75% out of the name. Henry Sheen filed an 8K saying that they lost one of their clients. That stock was lower by 3.5% on Friday. And Macerich, losing some of its gains after an upgrade, down 2.93% on the day on Friday. So let's take a look at the charts now. It's Monday. We look at a lot of the macro views across asset classes. Obviously, we're going to focus on equities as well, and the iShares Russell 2000 ETF is in focus for us today as the IWM made a new 52-week high on Friday and has been trending higher after breaking out of this consolidation that it was in for much of 2019. Fund is above a rising 200-day moving average, and the breakout at 160 really takes us out of a range that was about 15, 16 points wide. So if we want to add 15 points to the breakout level at 160, that kind of gets you an upside price objective near $175. Now, the recent strength is confirmed by momentum as the RSI, through the later stages of the consolidation, failed to become oversold and has now shifted into bullish ranges. RSI actually becoming overbought for the first time in quite some time. So to me, that lends a momentum confirmation to the price strength that we've seen here for the IWM. Now, one of the key themes that kept us cautious on small caps was their relative performance. And if we look at the bottom of the chart here, IWM relative to the SPY was in a clear downtrend throughout much of 2019. We've now broken above that downtrend line and are beginning to work higher. So small caps, I'm asking the question, are they now leadership? It's starting to look that way, and odds favor that continuing, because if we look at the bottom of the chart here, the bottom of the page, we can see that IWM has a bullish ETF power gauge rating, 757 bulls to 235 bears, just as we spoke about earlier in the show. So we think that there's scope for IWM, the small caps, to continue to do well and potentially lead the market as we move into 2020. It's something that we are watching very closely. Now, the 10-year yields near resistance at 2%. Yields bottomed in September and started to work higher. Regained the 50-day moving average, which is rising and has acted as support to near-term pullbacks for the yield. Now we're approaching resistance at the 2% mark, which lines up with the still declining 200-day moving average. Now, the RSI for the yield has made a series of higher lows as it attempts to shift to bullish ranges, but it's kind of, in fairness, has kind of stalled out. It's more of a neutral RSI at this stage of the game. Pullbacks have held bullish ranges, so that is encouraging, and that increases the odds that we will at least test resistance at the 2% mark. And obviously, this has implications for areas of the equity market. If yields continue to move higher, break through 2%, break through that declining 200-day moving average, obviously that has bullish implications for the financials and in particular the banks, and potentially bearish implications or further bearish implications for the bond proxy areas of the equity market, like the REITs and the utilities. Likewise, that rally in small caps and the diminishing relative weakness in small caps also coincided with this bottoming in rates. So that view that we were just talking about on small caps is somewhat premised on the path of rates here going forward. So obviously, we want to pay close attention to the 10-year yield as we move into 2020. And finally, commodities appear to be breaking out as well. And look at when commodities bottomed, commensurate with yields, right above the 200-day moving average, on the verge of a breakout as the RSI shifts into bullish ranges for the CRB commodity index. This is broad-based commodities. So we do have a potential breakout with a momentum shift higher. We're watching commodities on a relative basis as they do remain in a downtrend relative to the equity market. But this is a theme, obviously, that we want to be paying close attention to. So that is going to wrap it up for today. Head over to ChaikinAnalytics.com/today to sign up for that email. Hits your inbox every trading day before the market open. And I just want to take the time to wish you, your families, and the people that are closest to you a very happy holidays, and to thank you for taking time out of your morning every day to hear our reviews.